Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, substantial recovery is what we have seen from the lows. And that's, of course, courtesy what's happening in the PSU banking space right now. After Canara Bank's numbers, there's been a surge in SBI as well in terms of stock price. Around 136 points from the lows of the day. And the banking index, that continues to do well.
Well, as you mentioned, the screen right on top of you mentions the kind of outperformance the Nifty Bank is seeing. It's up in the green, up almost 1%. And when you're talking about the rest of the indices, they are still trailing in the red, but quite a significant recovery from the day's lowest point. But we have quite a lot packed and on the show. So let's move to the first management. Intellect Design Arena is the first management on the show. Company reported a disappointing set of Q2 numbers. Revenue and EBITDA margin came in lower. We have Arun Jain, the chairman and managing director of Intellect Design Arena, with us. Good afternoon, Mr. Jain. Thank you so much for joining us. Slightly disappointing quarter against what the street was anticipating. You are guiding for a 700 crore quarterly run rate. So could you give us a sense of what is giving you the visibility to go ahead and reiterate this particular quarterly run rate?
Yeah, so thank you for calling me. And we discussed with you earlier, we launched eMAG.ai, the first principal thinking-based simplification of banking. So a lot of Europe and America is infested with the fourth generation of technology and legacy technology, which is putting their cost structures much, much higher than the Asian technology cost structures. And that's where the major issues are emerging, and there's a big opportunity for them to replace it. But they cannot replace it. It's so embedded there. So we come out with a first principle thinking called Event Microservices, API, Cloud, Headless, and AI-based platform, which is driving the change. So we are currently working in 10 different large deals in Europe and Americas, because the point is the value of the deal for the company to sustainable. We shifted our focus to Europe substantially in last 18 months. And that has, but the sales cycle time in Europe and America is close to 18 to 24 months. And because we had to cross almost 5 different bridges to win the deal, to get the contracting done. So in this quarter also, we have one contracting done on first week of October, which was not able to be accounted in a whole last quarter. So quarterly numbers are not good, but all of us with these 5 bridges and around 10 deals are in GTB business, which we are contesting for next 6 months, 5 deals in GCB business and 3 deals in AI business. These 18 deals are of multi-million-dollar size, which will giving us a confidence to drive 700 crore run rate maybe 2-3 quarters away from now.
Got it. So that defines why you are guiding for a 700 crore quarterly run rate in the second half. Mr. Jain, season's greetings to you and everyone at the company. I wanted to also understand you had a target of revenue growth of 15 to 20%, EBITDA margins of 30%. If that is not happening in FY25, do you think FY26 onwards you'll get to that number?
We'll be looking 25 plus in FY26, definitely. So if luck favors us, it can be higher, but 25% is our focus for the next year.
And 26. Margins at 30%?
EBITDA margin of 25% and growth of 15%. Okay. 15 and 20, much better.
Mr. Jain, let's talk about the annuity part of the business. The AMC as well as the SaaS, they contribute close to 40% of your total revenues. You've also mentioned earlier you want to increase it as a part of your total revenue stream. What kind of visibility are you there, and what are the targets you've set for yourself in FY25 and FY26?
I think these numbers will not shift substantially right now. This AMC and ARR runs over the 3-year period. So when you look at 3-year period, they will jump to 5-7%, and those numbers will drive the big change in the 5-year investor perspective, 3-year investor perspective. Year on year, these numbers increase by 1%, 1.5%, 2%. That is the kind of a nature it is. So we were around. These numbers were close to 18% when we started 7-8 years back. Now it comes to 40%. It should be 50% plus in next 3 to 5 years.
Okay. So Mr. Jain,
comes like Oracle today enjoy a lot of benefit of these numbers, which drives the major profitability for them. And these numbers were created during the early phase of 2010 to 2015, which is driving significant profit for Oracle.
Okay. All right, Mr. Jain, thank you so much for joining in today and giving us all those details of what happened in the quarter and most importantly, the outlook going forward. It was a pleasure speaking with you.
Thank you.
Okay, all right. With that, we'll do one thing. We'll slip into a break. But before that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.